Ladies and gentlemen, Keiki here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.69%. There on the S&P Nasdaq 0.65% negative. Semiconductor 1, Dow almost same. Russell 2000 transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market. Every single sectors are seemingly red today. Bitcoin up, gold, silver miners are also dollar down, oil down, treasury bond up, the rates are down. VIX popped a little bit today. Let's stick with S&P 500 ETF. Spider 65-minute chart here. So this is what we closed on yesterday. And looks like since I've been gone, there has been quite a bit of shenanigans here, as you can see. I believe I left somewhere in this vicinity since my last video. Market gap down, came down pretty heavily here. We gapped up, rallied up for entire several days, comes right back down, trying to get up, comes right. So basically market hasn't gone anywhere. We're just still in this vicinity, moving sideways here. But looking at, last week or so of a price action, we've been all over the map, reclaimed all the moving average. Last the micro term came below the sum of the micro term, short term, and mid term. We got right back above it. However, it looks like the micro-term moving average is faithfully supporting the sellers. You can see not able to get above there, even with the gap up this morning. You can see that upper wick there. Upper wick here. Second, third, fourth hour upper wick. Huge fluctuations on the fifth hour. And that looks like we lost all the moving averages on the second hour. And we're just right on that long-term moving. Keep in mind that long-term moving average, we did see that support last time when we did see that gap area there, gap up here on the 26th. And once we did see that gap of this market truly ran for vertically there. And so this is important level because I think with the long-term moving average in that vicinity, we're just right on that. We're retesting it. Not only that, we do have a gap area. So this is very, very important for both bulls and bears. Bulls obviously want to protect this up gap. As long as this gap remains open, bulls can still, push that back up. So, and ultimately to get back up to threaten this down gap that just happened. Looks like, was it today here, right? Tuesday, a Monday morning, right? So I think, because this gap is rather a sizable up gap. So if this gap remains open, I could still see buyers, make some sort of base or something here to get back up here. I think it'll be okay to maybe even filling half of it or so, like 50% of it, letting the bears, if that bears really bring it down tomorrow, bulls need to at least 50% or so, that gap needs to be sustained. If the entirety of this up gap, right, if the entirety of this up gap gets filled tomorrow, things will become extremely, extremely hectic for the month of May. This gap is gonna project what we may witness for the month of May. Let's check out that oscillator. So that oscillator, as you can see, looks like we initially looked like we found support here. So we see that little bounce, right? And then it crossed back up today. It looks like very much neutral going into tomorrow. You can see the oscillator. We haven't crossed down. We haven't crossed up yet. I mean, this could very much look bullish depending on how this market plays out tomorrow. And this could look very much bearish depending on how this market plays out tomorrow. So I think that's all kind of based on how this market is going to deal with this long-term moving average here, right? And the gap area, right? Keep in mind, we are still below the micro term because of today's action, below the micro term, short term, and mid term moving average. We've been trading all around it this week right here. As you can see, we're all around it. So I think only thing that really matters is gonna be the micro term, because that's been faithfully acting as resistance, and the long term, because again, that level did act as very strong support on the 24th of May. So that's kind of where we're sandwiched in between the micro term and the long term moving average. Whoever reclaims those moving either to the upside or downside, that's gonna be the team that's going to determine for the month of May. But you know, the long term moving average is here. But because of the gap area, bears has to work a little bit harder. But let's say bulls get up here and reclaim the micro term. It's going to give you a little bit more room here to feel that down gap. Again, that down gap is much smaller than this up gap. So I think overall, you know, depending on how this market is going to play out in this range, right? Again, that range of the gap area and the micro term moving average, and the up gap area and the long term moving, and how this market behave in this range. Okay, I'll give you the range of, okay, let's say 415 and 407. So 415 and 407, it's gonna be the range. Whoever reclaims, right? If the bulls get up here and reclaims the 407, that's gonna be the victory for the bulls for the month of May. If the sellers come down and reclaim the 406, 7, 405 area first, and that's gonna be the victory for the month of May for the sellers. So we're just kind of right in this juncture here, important juncture for both bulls and bears. It'll be extremely important how this market behaves going into next several days. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Love trading tomorrow.
Raise.
Raise 12 million. Heads up.